It's the earning season, and the company on our radar today is Five Star Business. So the company posted a strong growth in disbursements and total assets in a seasonally weak first quarter. We have the management with us, Mr Rangarajan Krishnan, who is the Chief Executive Officer at Five Star Business, joins us. Thank you so much, Mr Krishnan, for taking the time out and joining us here on Business Today Television. And I want to start with the stellar performance only. I mean, typically, June quarter tends to be muted for lenders compared to March, but the company posted a 43% year-on-year growth in AUM to 7,583 odd crore rupees. So what really led to this kind of growth, and is this kind of growth sustainable going forward?
Firstly, thank you so much for having me on the show, and it's a great day to be, live on the TV with the news of Paytm and Zomato's really rocking the markets. Generally speaking, Q1 is one of the dullest quarters for most of the lenders because you would have peaked up during Q4, and it takes time to pick back that speed. But I think what happened during last year was very atypical because FY23, as you will imagine, was the first full financial year post-COVID. So the entire year was great for Five Star. During COVID, we had only posted about 15% growth rate very consciously because we are a collection-first company, always focusing on quality of growth rather than just quantity of growth. But during last year, we inched up the growth from 15% to about 37% for the full year. And that momentum sort of continued. So what happened during this Q1 is just that whatever pent up demand was there, that momentum has continued, and that helped us post a very solid quarter during the Q1.
Such a pleasure to host you. We'll start with your stock price. The IPO was at 474 rupees per share in November 2022, and you're doing such a fine job at 760, a record high. And it's been an exciting day. We've discussed NBFCs and no other stock. Before you came in, we were in discussion on Poonawalla FinCorp. Then we discussed Shriram Finance, and of course Paytm took it away when it comes to the top news of the day. Let's drill down into your numbers. Please tell us how much of your lending is now unsecured, what is the average size of the loan, and which geography and which sector are you seeing the maximum growth coming in from?
So firstly, we don't have any unsecured exposure. 100% of our book is backed by collateral. We broadly lend to three purposes. We give business loans, and we give loans for building houses, and we also give loans for meeting any significant economic expense that happens in a family. But across all the three end uses, the underwriting is the same, the collateral is the same. We take the self-occupied residential property of the borrower as a collateral. So in that sense, our entire portfolio of close to 7,600 crores, we don't carry any unsecured exposure. 95% of this entire portfolio is backed by collateral, which is SORP, self-occupied residential property, and the balance 5% is backed by commercial properties held by our borrowers. We are a dominant South player. We are headquartered in Tamil Nadu. We are a dominant South player. Today, close to 93-94% of our portfolio is coming in from South. But that said, I think over the last 4-5 years, we have consciously been making efforts to move beyond South. Today, we have a presence across 5, rest of India states, which includes Maharashtra, Madhya Pradesh, UP, Rajasthan, and Chhattisgarh. We are slowly expanding in these states. Our approach has been fairly cautious because lending is a very concentrated business. You need a lot of local knowledge, regional knowledge to be a successful lender. So we have been very cautious expanding beyond South. So our approach has been that whenever we expand beyond South, we firstly put up a few learning branches in each of the states. We wait out for those branches, from an experience perspective, and beyond 24 months of good learning, we decided to accelerate in that, in that state particularly. So if you look at the last 4 years journey, Madhya Pradesh was a great success story for us. That was the first, non-South state where we decided to expand. We had initially put up 4 branches. The experience was really good. Last week we opened our 50th branch in Madhya Pradesh. So, I think that's the template that we would like to follow on any state which is beyond the South.
Okay, absolutely, Mr. Krishnan. And all the cylinders of business, collections and profitability and quality have been good for this first quarter. of this financial year. So have you revised your growth guidance if you talk about FY24?
Sure. We started our growth guidance for the year with about 30%. But I think given the strong Q1 that we have seen and the continuing momentum that we're able to see on the ground, we have revised our growth guidance upwards from 30% to 35%. We are fairly confident that, with Q1 clearly in track and whatever we are seeing in the months of July, that also being exactly in line with our expectations. This is a sustainable growth for the short to medium term. We have given a guidance of maintaining this growth rate for at least 3 years from now.
That's a wonderful potential growth there, Mr. Krishnan. How do you plan to achieve this? Is it via some inorganic route as well? Are you looking at smaller unlisted NBFCs that you would like to add to your top line, or will this completely be organic?
So far, I think during the 20 plus years of journey that we have had specifically on this product, the growth has completely been organic. From FY15 to FY23, we have clocked close to a 60x kind of a growth, and this entire thing was organic. We had not bought portfolios, we had not bought other companies, because it takes a lot to get a good quality portfolio, and we like to build that portfolio. So that has been the approach so far. But I think we are sitting on good net worth and good capital. The entire profits have been reaped back. We don't pay dividends, as a policy. So that said, I think we have the wherewithal to look at inorganic opportunities, but nothing on the table. We will be opportunistic if something interesting comes up, in adjoining spaces where we operate. But the 35% growth guidance that we have given to the markets is not keeping in mind any of the inorganic acquisition opportunities. We are confident that purely through organic means, we'll be able to clock 35% growth rate. And I think we are confident of doing it, largely growth levers, which comes through three aspects. The first is, of course, we'll put up at least 75 to 80 new branches this year. Last year, we put up 73 new branches. And in the first quarter, we have already added about 13 branches. So we are confident of reaching a 75 to 80 kind of a new branch setup this year. Predominantly, these branches will come up in the south. Maybe about 75 to 80% will come up in south, and 20% will come in the rest of India. This is the first lever of growth. The second lever of growth, as a strategy, we have always been adding more number of field officers in every branch that we have opened. It's a unique strategy, but what it helps us is that when you add more people to the same set of branches, that helps us penetrate deeper in our existing geographies. It helps us keep the portfolio quality really high. So that's the second lever where we'll continue to add more people to our existing branches. And of course, the third lever, given where inflation is, we'll also expect some inflationary growth rate in the ticket sizes. Even if you take the ticket sizes, our ticket sizes today is about 3.5 lakhs per loan. One of the smallest ticket sizes from an average lending perspective across the secured portfolio of lenders in India. But of course, this will at least see some kind of an inflationary growth of 5-6%. So put together all those three levers, I think 35% growth rate is something that we are confident of.
Okay, absolutely, Mr. Krishnan. And currently 90% of five-star businesses disbursement and assets comes from the southern market, if I'm not wrong. And the company is planning to expand, to other geographies like MP, Maharashtra, Chhattisgarh, Rajasthan. So can you tell us, more about your expansion plans going forward?
So, today, to be precise, 94% of our portfolio comes from South and 6% comes from the rest of India. Like I said, the approach to expansion is going to be fairly cautious. We will grow aggressively in South, which is our strong markets. We will go extremely cautiously in the rest of India markets. But I think the approach that we will follow is that we have identified at least 6 to 7 potential states where we can potentially expand. We will ensure that we are starting off with these states, and we will wait out for at least 18 to 24 months before deciding to press the pedal and expand aggressively in those states. So from an AUM growth perspective, you will continue to see South being the dominant part of our portfolio. I think from a guidance perspective, even if we have to fast forward about 3 years from now, South will still constitute at least 85% plus of our portfolio, with the rest coming in from rest of India. So the rest of India strategy is important for us, not for the immediate AUM growth, but it's important because 3 years, 5 years from now, we don't want to be in a situation where we still only know South markets. So we are using this time for the next 3 to 5 years to understand new markets, to build good teams there, to understand the nuances of mortgages in these markets, and be ready to accelerate growth in those markets maybe from 3 to 5 years from now.
Right. Mr. Krishnan, a final question. You've increased your guidance in terms of top line. Would you sort of pay some kind of attention to the net margin, which on a trailing 12-month basis is 38.7 and an EBIT margin of 69.25%? Would you be in a position to maintain these fantastic numbers, or will they improve?
Yeah, I think we have guided for a slight drop in net interest margins. More, it's because of financial structuring rather than anything else. From a inability to price perspective in the market, because we are under levered at this point of time. If you look at our leverage, we are hardly at about just 2 times leverage at this point of time. So as leverage picks up, which means you will end up doing more and more borrowing from the market, your interest cost will go up, which is actually funded by equity at this point of time. So slowly you will start seeing that the NIMs will drop to an extent. But however, given the leverage being picked up, the ROEs will grow. So if you look at even last quarter, there has been a slight drop in the NIM, not because we reduced the interest rates or our spreads got reduced. Our spread, incidentally got increased during the quarter. But however, with the pickup of leverage, there was a marginal drop in the NIM. That trajectory will continue over the short to medium term, and slowly the game will shift from ROAs to ROE. So with steady state NIMs of about 12 to about 14%. Today it's about 17.5%. It will drop to about 14%. But with leverage going up at least to 3.5, 4x, we are seeing ROAs settling at about 6.5 to 7% over the medium term. And from there on, we'll be confident of delivering at least 20% plus kind of ROEs.
Right. Right. Thank you, sir. It's been a pleasure listening to your growth plans, and also looking at the fantastic stock price at 763 today. Remember, the IPO was at 474. The company's come up with a fantastic set of numbers, and today's been a day where we've discussed more NBFCs than anything else. Thank you for your time, sir, and all the best for the coming quarters, both in terms of top line as also the margin expansion and of course net profit.
If you like the video, do like, comment, share and subscribe.